All right. Good afternoon, everybody. Welcome to the weekly Take on the Market. Today is Friday, February 7th, 2025. I'll be your host. My name is Scott St. Clair. I am the manager of the Premium Product Group here at Investors Business Daily. Please take a moment to read the disclaimer. I'm not licensed. Nobody at IBD is licensed that I'm aware of. Don't tell you what to buy, what to sell, what to hold. All right, good to go. So same stuff, market indices, some interesting tidbits I came across in the last 2 weeks. I didn't do a show last week. Then we'll do the industry groups, stocks to watch, and the quote of the week. So let's start with the slides. And I don't know if this tells a whole lot, but I find it interesting that most of the time after two big years up 20% or more in the S&P, the following year is underwhelming. Doesn't mean it has to be negative, but almost always it's not a it's pedestrian to just okay. The one exception though is 95, 96, 97. And so, and who knows, we might be in that type of boom type period with the whole AI thing. So it's funny that they say history doesn't repeat, but it rhymes. And this market very much is rhyming with the internet boom, the 1990s bull market. So it's possible. Doesn't mean it can't happen, even though most of the time it doesn't. But I find it interesting that it kind of, to me, of all the periods in history that I've studied, seems to reflect that one the most, for what that's worth. Okay, this was a great chart. I thought this was very interesting from Prof Plum 99 on Twitter or X, if you prefer. It's 2010, and obviously I can't confirm nor deny. I can't confirm that this is accurate, but this guy's a reputable. Um, it's not like a parody account on Twitter or anything, so I'm going to assume that the numbers are right. It's down 12% intraday since 2010, and up 26,000% overnight. So all of the gains and then some are from holding overnight, and that's a lot of the gains I think in the market are from holding overnight. You have to kind of take the risk. Now that's there's risk. You get the gap downs when you're holding overnight, but the reward over the long run, if you're just consistently taking those risks, will overwhelm. And Tesla's the outlier of all outliers, but I just couldn't believe that number, the difference in performance. Like literally, if this is correct, if you shorted Tesla on the open and covered on the close since 2010, you'd be up 12%. I don't know if I did that math right, but you get the idea. You got to take the risk overnight. And this is I've seen this chart, although not this extreme, for the S&P as well. You got to take the risk overnight. And it doesn't mean you can't adjust accordingly, but that's the way to get outsized returns. Is you got to take a little bit of the risk overnight. I thought this was very interesting. NVIDIA's long-term earnings with analyst forecasts. So you see 2018, 2019, just kind of like up and down, and it's a little scrunched because of the scale here. But the way that people extrapolate in the market is it's funny to me, because I can guarantee you this is not how it's going to play out. I don't know. It could be better, could be worse, but it will not play out like this. They're just not going to stack 2% or whatever this number is quarter or year after year after year after year on earnings. It just doesn't work that way. There's too many bumps along the road, too many changes, too many things can go wrong and also could go right. So, but this is why people will tend to, Wall Street tends to issue, buy recommendations all the way up. Like the more it goes up, the more they like the stock, because they just start building these models that extrapolate in a linear fashion. And so kind of gives you kind of the mindset of Wall Street, for whatever that's worth as well. All right, there was a good article in the journal about the markets and investing in the AI boom, and this is again human psychology. This gentleman, Angelo, was once skeptical of the fervor surrounding NVIDIA. So from 100 to 1,000 or whatever it went, he's skeptical, right? And then on Monday, when it was finally down, he was thrilled to see it. I feel like a kid on Christmas now. I took advantage of the sharp decline in stocks to scoop up $1,000 worth of shares. If it goes down, I'll buy more. I'll just keep buying the dip. And the mindset of most investors is that like a grocery store. If you love avocados, you go to the grocery store, and if it's 3 for $1 and it's normally 3 for $9, you'd buy as many as you can, as barring spoilage. It's not the same in the stock market. So what they saw was he witnessed NVIDIA go from 100 to 1,000, split adjusted or whatever it might be. And now at 900, he's anchoring to that 1,000 price. In other words, 900 is cheap. It used to be 1,000. 850, even cheaper. It used to be 900. 800, wow, that's really cheap. It used to be 850, 900, 1,000, if it can just get back there. And that's how they get themselves into trouble, because if it doesn't go back, it could go 700, 600, 500. At some point, the pressure will just be so great, they will give up on the stock and take a really large loss. So you have to avoid this kind of mindset that, it doesn't matter where stocks have been. It's kind of where they're going. And the chart kind of tells you that's kind of what Bill would talk about, like with overhead supply. These are people that have owned it at higher prices, and it makes it very difficult to kind of eat through those prices on the way up. Okay, so those are some of the things. I thought this was really interesting on the bull case. So those were, I don't know if those were bearish or negative sentiment, but this is definitely in the other side of the coin. AAII sentiment, bullish 33%, 42.9% bearish, a 1-year high. So we're within, I don't know how far off the highs the S&P is. We'll look, maybe 2%, 3%, something like that. And almost half the voting on this poll was bearish. I don't know why. I don't have an answer for why. I just find that super interesting. I've never seen this before, but I don't know if it's something they started doing but they said, this week's special question: how would you describe the current valuation of stocks? Stocks in general are overvalued. More than half, barely, but more than half said yes. Values are mixed, and stocks in general are undervalued 1.4%. So they'll think that this number will flip to stocks are undervalued when the market's down 20% or something like that, because they'll think, well, it's down 20%, therefore it's undervalued, and that's kind of the wrong mindset to think about. All right, so let's jump to, I think that was it. Let me see. Yeah, so let's jump to the charts, the indexes. And let's refresh it. Here's it's 118, so it should be pretty much done. You had distribution day on the market. I know the IBD team was kind of contemplating what to do as far as like the exposure levels. I don't know if they're going to go, I think we're at 60, 80 now. So they'll go from 60, 80 to 40, 60, possibly. It's very difficult here. The market's very noisy. Most of the day, the market was okay. And then I think there was some talk that Trump is going to, do his little tariff dance this weekend. And so that influenced the market near the end of the day. It turned out to be pretty weak. Relative strength, we are sitting on a divergence, which bothers me, right? So we've got this high here, got a lower high there, and if I go to the S&P, I hate that does that. I wish I could fix that. I can't. I don't. You've got a high there, and a higher high there. Did I do those right? Let me make sure. So that high was in December. And this yeah. So you high there and then a higher high. So you have a bit of a divergence, and it's showing on the relative strength. Tiny bit lagging. The Dow, let's go to the Dow. Oops, what I want was, let me use the drop downs, much easier than me typing it. Bit of a divergence as well, lower high. I mean, it doesn't look terrible. It doesn't look like a short. I'm not short the indexes at all, but it's just hard to know here. Really, really difficult to know here. I've kind of tried to get away from the indexes. The only thing about the indexes is I need something like a compare and contrast. So, Tesla's not acting great. Nvidia is acting just okay. Apple's acting very poorly. Well, compared to what, right? So I need something to compare and contrast to. So that's kind of why you need the indexes. But trying to evaluate whether they're going to go up or down every day, every week is just become kind of a mugs game. You're better off evaluating the stocks that you're in as best you can. The market's done this, and what did Apple do in that time frame? Yeah, basically has gone nowhere. Gave it 80% of it back. So that's kind of where you get this. That's where this line really helps, and why that's important. So I don't have an answer for the indexes. I don't know. I wish I could be more. I wish I had something. I wish I could put my finger on something and say, at least say I feel this way or I think this way. But I don't know. I just don't know what to make of the indexes here. So I'm just trying to focus mostly on the stocks. Let's look at some like gold. Gold has held up really well. Silver tried to rally. It's fine, but today was not much of a day. And then you've got a little bit of strength in the Chinese stocks. KWEB, I had a little trend line drawn here. FXI holding up pretty well. India, nothing. What about like Brazil? Commodity, nothing. There just really isn't anything across the board. Japan, nothing. So it's US or bust. It's the only game in town, it seems, as far as the indexes and holding everything together. So let's see how long they can hold that up. What else would I want to talk about I guess from an index standpoint, should we do Bitcoin? A little bit of weakness, not terrible, but this looks like it's going to be the first close below the 10-week line since the rally started. So whatever that's worth. Only reason I watch it is because I feel like MSTR has gone so far that it's looks very toppy to me and could be shortable, but that's the only reason I watch Bitcoin. But I don't have a position in it right now. It's just too. I just don't. I'm not sure. It looks broken, but I'm not sure. So when in doubt, just stay out is probably the best way. Industry groups. Let's jump to the industry groups. Let me turn my camera off while we go through the stuff here. Here we go. Let's go ahead and rank them. Telecom fiber optics is 1. Transportation airline, what a group. 2. Network solutions. Telecom infrastructure. Energy alternative, that's been gangbusters, doing really well. 42.53. See how that's kind of the way you want to go. Look at telecom equipment, 102.63.16. Machinery, metal, automation. Haven't looked at that in a while. 190.79.17. You have a lot of them moving in the right direction. So this is something I'll probably spend a little bit of time on this weekend, is going through the industry groups, trying to see if there's some type of trend showing up. All right, so let's jump into stocks to watch. And let's just go through like all the big boys. So NVIDIA, the bad break on the DeepSeek. It's trying to hang in there. It is NVIDIA. It's not going to go quietly in the night, but you can tell it's very pedestrian stock in the short term. What's the, let me go to the technical, and there are 3-month RS is 13. I mean, it's underperforming 87% of the database in the last 13 months. The 6-month is 46. So more than half the database is better than NVIDIA in the last 6 months. So it feels like a market performer at best as we sit here. Weekly chart. Gosh, I didn't even realize. First touch of the 40 weekend. Jeez, since the beginning of the move. Very interesting. Amazon. So I think they announced earnings today, and 86% stock. It had not a great day, but still above the 50-day. Nothing wrong with that. Apple looks very broken to me. Tried to gap up on a very pedestrian report, and they sold into it. This is one of my go-to shorts if I want to be short. I'm not short Apple at this time, but I did short it on the earnings gap. Tesla, I am short Tesla with the synthetic, one of the ETFs. I don't know. I don't know if I'm short it because I want it to go down, or if I'm short it because I think it's going to go down, or maybe a little bit of both. I am very cognizant of that sometimes I think I have a bias against it, and so I have to fight that urge. But that's not a great close, right? I mean, I guess the volume is not all that great, but breaking the 10-week defensive sell signal. If you bought the cup with handle, this is your first defensive sell signal. And if you bought the cup with handle, you did great. You're up 37%, 16 weeks. I just can't get over the numbers. They're just so pedestrian. And so if it's not a car company, then I guess I'll be wrong, and the stock will go up, because that's really what everyone's excited about is the stuff that's not a car company. If it is a car company, honestly, it has a long way down to go potentially, just to be one of the great car companies, valuation wise, with all the other car companies. Even if it's twice the car company as BMW and Mercedes, it could still go down a long way, for whatever that's worth. But I've been mostly wrong on Tesla, to be honest with you. I had one little very good run in it in that bear market, but honestly, the amount of money I could have, if I'd have been more open-minded, made on the upside would have dwarfed the money I made on the downside. So that's just my 2 cents on the short side. Short side is very, very difficult. What am I missing? Netflix is holding up great. Last I saw, yeah, Netflix and Google. very NVIDIA-like to me. Like to me, NVIDIA is Google is a market perform. It's just going to do what the market does, give or take. All right. So what about like leadership? So you got Palantir finally slowed down a little bit today, but boy, what a move. The weekly chart. I mean, this looks very climactic to me. That's not a great draw, but maybe that one is. So let me draw that one. 1, 2, 3, 4. I'm sort of connect. That looks climactic to me. I think it's a sell, but I'm not in it to sell it. So what good is that to think it's a sell? But what a great stock, and there are a lot of you out there, I'm sure, and I know there's some of my colleagues at work have and do own this stock, so they've done great in it. Apps. Oh, I'm sorry, I got the wrong one. APP. So it's building a base, which is nice, holding up really well. I think if you own it, you leave it. If you don't, you just probably, hopefully you get a cup with handle, give you a nice clean potential pivot, possibly. Well, I didn't do Microsoft. Very, very Google, very NVIDIA-like market perform, in my humble opinion. What's the FANG index looks like? I haven't looked at this in a couple of days because last time I looked at it, I was like, it doesn't look like a short. So why just take it off the screen? Don't bother. It doesn't. But you see, I have this trend line drawn. So if it were to change its tune to the downside, I'll get alerted to it. But it doesn't look like it's something you want. I don't know if I want to be long it, but I don't want to be short it. Palantir, Apple. What else? Oh, what about like the power play? Oh, this one, this is crazy. This just goes to show you how stocks can go up so much more than you ever believe, and then go down so much more than you ever believed as well. But the market is filled with these right tail events, and I just totally mishandled this. I have a friend that's still in this stock because I told him to buy it, and he said, Scott, you told me to buy it and don't sell it unless I have to stop out. And I told him that months and months ago. And I was like, I wish I had taken my own advice. So I don't know how he's going to get out of it though, because I think he owns it at like 11 or something. So, I'd have had him out at 20 and 25 and 30 and 35 and 40 and 45. So maybe he never gets out. Maybe it just stays above 11 forever and he's fine. So, but I find that funny that I told him that so many moons ago, and I just couldn't follow my own thought process. CEG. So you had this bad break on DeepSeek, the DeepSeek news, and a lot of them came back. It's and that's one of the things you got to get I'm trying to get better at and have gotten better at. Like I didn't buy CEG, but like if the stock breaks like this and then comes back, well, that's a amazing strength sign. Like it shouldn't come back. If you get a bad break, it shouldn't come back. I did buy Vista like that. So you had a bad break and then it came back, but it just didn't hold it that well. But you see, you get like this bad break and it takes a lot longer to come back. I don't know what the window is. Wish I could tell you the window is 9 days or whatever, 9 trading days. But when they come back that fast, that's a sure sign of strength. They should be bought, in my opinion, if you already like those stocks, if you're already considering them. But you can see like it undercuts here, bad break, and boom, 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 in 3 sessions off to new highs. So you get a bad break here and can't even go down for, I know this is a really bad break. It's down 20%, I think, but it can't even go down for more than 1 day. I wish I could, 28%. So that's a really bad break. So I wouldn't be in any hurry to buy it the next day. But after 1 or 2 or 3 days, when it can't go down, it can't even have a red day. That's usually a pretty good sign that the institutions, that was a shakeout. Now, NVIDIA has a bad break tried to go up the next day and it actually made another low, which is unusual compared to the others. So that's a story in itself that says that one was much weaker than the CEGs and the VSTs, kind of the power area. What else is out there in this? I talked about Palantir. So here's another one, NBIS, that had this bad break, right? Couldn't go down. I have a very small position in this. I sold most of it today just because that's what I do. I didn't do anything wrong, but that's kind of what I do. So, but you see, it never made another low. Bad break, never made another low. What else? Uh, on the Chinese side. So this is where I've been mostly concentrated in. It's really hard. I've struggled with it because it is Chinese stocks, but this Futu, which I have a position, looks very, very strong to me. Baba, which I do have a position in, didn't have all that great a day today, but you know, 'cause the market was poor, but it was still up 3% on the day, breaking out of this cup with handle. You don't quite have the same look on the weekly, and I'm glad I went to the weekly because this is something I want to talk about. A lot of people or emails that we get. It's like, well, why does Baba have a cup with handle on the daily, but not on the weekly? And what's happening is when I pull up this chart, Baba weekly, the algorithm in the background is reading the chart and it's drawing the pattern it quote unquote sees. And this doesn't look very cuppish. Now, maybe if it goes sideways for another couple of weeks, it'll look more rounded and it might change into a cup or a cup with handle. That's a possibility. It could do that. But right now it sees this as just this large consolidation. Now, if I go to the daily, the algorithm doesn't have any clue what the weekly pattern is telling you. It just says, okay, market surge is on the daily Alibaba chart. What is the pattern? And so it's reading each pattern independently. So that's why it can have a different pattern. It doesn't happen that often. I would say probably 92% of the time they're the same. I'm just kind of spitballing that number, but it can have different ones. And you can see here, very different. Not only does it not even see a cup on the weekly, but we've got a cup with handle on the daily here. So now the question is which one is right? Well, they're both quote unquote right. They're independent patterns. You have to kind of make your own decision. Well, which one should I use? Which pivot should I use? Well, again, that's up to you. I'll tell you if I like a stock and XYZ and I want to buy XYZ and the daily has a pivot of 99 and the weekly has a pivot of 102, I'm just going to choose the 99 pivot. I'm just going to buy it at 99. I'm going to buy it as soon as I can if I want to own that stock. But again, you have to decide how you want to handle that. So that's kind of a built-in lesson with that one. So Baba, JD, which I don't own, and it's nothing wrong with it. I probably will buy it again if it starts to get legs through here. You know, double bottom. But I had 3 Chinese stocks, and I just felt like the exposure from a diversification standpoint was a little strong for me because I like to have a position. You know, I don't want to have 2% in the stock. It's just not going to move the needle for me. I'm going to get bored with it. I'm going to mishandle it. I'm going to add to it wrong. I'm going to sell it because I'm bored with it and watch it go up 1,000,000 points. So I have to have a position of at least 5%. So when I have size, if I have 15% in Baba and 14% in Futu and 16% in JD or whatever, and I start to get out the calculator and I'm like, oh my gosh, I got 45% of my hard-earned money in Chinese stocks. I get nervous, unfortunately or fortunately. So that's kind of what I did. But when I see that, you know, the backdrop of, let's just pull up an ETF. So it topped at 54, went way down here, but here you are at 30. So you're what's that, 25% or so, 37% off the highs in the last 4 years. Imagine, I'm not saying it's exactly the same, but if you look like CAF, which is the China A shares, it hasn't made a new high in 18 years. But imagine if in 09, and I didn't handle this very well, but in 09, you've got the S&P way off here. So April, May, June, July. So you've gone through this massive bear market here, and you get Amazon. What did Amazon look like? Well, practically new highs. See that? What did Google look like? Not quite new highs, but up 5 months in a row. What did Apple look like? Practically new highs. So you see the relative strength. You see see what's going on relative strength wise in these names versus they're all making new highs. And so you have the best companies, best businesses making new highs after you've had a massive bear market. And that's kind of what I see happening in Chinese stocks for what it's worth. But again, they are Chinese stocks, so it makes you nervous. But I would say that if you're worried about like the geopolitical risks of them, I don't blame you. I think about it too. But if you own Nvidia, and there was some geopolitical event over there, Nvidia is going to open down a lot, because all their chips are made in Taiwan. So you have exposure whether you love it or not. And I'm back to that Tesla chart. Sometimes you just got to take risk and try to manage it as best you can overnight. And the overnight risk is there for sure. There are some other ones in QFIN looks okay. And is it I can't think of the travel one, but for me, the two I own is Futu and Baba, and it's because of sponsorship. David Tepper's hedge fund has a big position in Baba. Michael Burry has a big position in JD and Baba. Brad Gerstner of Altimeter Capital, he has a position in Futu. It's very small. It's like 2%, but it's that whole sponsorship thing that helps me to give me confidence to own them. I need some kind of sponsorship, which is why I'm in those ones. All right. I think that should do it for stocks. What about SMH? So there's the top, 9-10 months ago, relative strength, unlikely to exceed that. This is a very interesting index / ETF to follow to kind of see where the money's flowing, how the market's holding up. Okay, let's go to the quote of the week. And I think it's an appropriate quote for when you think about that article from the Journal about that investor that wants to buy the dip in NVIDIA, how he's going to buy it all the way down, so to speak. Aaron Brown, he's the author of this book, The Poker Face of Wall Street, but he was I think he was the risk manager for AQR Capital. I hope I got that right. I'm fairly certain I got that right. But I've seen him on a couple of podcasts and YouTube videos, and I thought this really kind of jarred me when he said this. And so I wrote it down and put it on a piece of paper and hung it up on my computer at the time. The more you pay for stocks, the safer they are. And for the most part, the higher the expected return. I think about this like in the way that Bill would say you want to buy stocks at or at or near all-time highs. There, I don't know if I would use the word safer, but that's the word he used. Um, and so they're safer there, and for the most part, the higher the expected return. So I think about like Palantir, which went public at like 10 or whatever, and built this huge base, and then it went to 20, and then 25, and then 30, and then 35, and then 40. And it's like our mindset is, oh, I've missed it. But really, if you had this taped to your monitor, you'd say, gosh, this stock's becoming quote unquote safer. And it's not my favorite word, but this is the word he used. But the higher the expected return from that stock. So every time Palantir made a new high, like 25, expected return turned out to be great. At 40, the expected return was incredible. How about when it gapped up the other night on earnings? Now, it's only a short term, a handful of days, but gosh, that's really high. Expected return it was skewed in your favor. How about Oklo? I think about that with Oklo, the one. I was down there buying it, and I loved the story, the narrative, but I got nervous as it started to go higher. But the reality is that's actually when I probably should have been buying it in the 20s rather than where I was buying it. But the expected return of the stock at these higher prices is better. So I would say that for us, the way we think about it is like new highs. And that's why we want to buy stocks at new highs. They kind of have room to run. If stock that's never been at 50 is finally prints 50, you don't have a single investor that's down on that stock. Nobody is lamenting their purchase of XYZ when it makes a new high. Everybody's kind of happy. And a lot of times they want more of it. And especially on the institutional side, it's likely they haven't gotten their fill of the stock when it's made new high. And they're the ones that are going to buy Palantir at 25 and at 35 and at 45 and at 75. And they just keep buying and buying and buying until they build their position. And sometimes they probably get anxious when they can't get their fill at 40 or 50, which is why another thing that Bill would say, like the best part of the move is at the end. And that's something I have to kind of remind myself of too, because if I get out of them too soon, the best part is at the end. The best part of Palantir is in the last handful of days. It was really, really good before, but gosh, I think it's up 35% in like 4 sessions this week or something. So food for thought. I find this quote very interesting, especially from that mentality of buy the dip. I would assume if this is true, then I wonder if he thinks the opposite is true. The more it goes down, the riskier they are and the less expected return you would have. I would be curious if that would be the case. I would think so, but I don't want to put words in his mouth. All right. Contact information, 800-831-2525, marketsurge@investors.com. Have a great weekend. We will see you. I'll be back next week. Thank you.